Here with another Thursday live event. I've got my good friend Max on, and I'm going to bring him in now. I don't have his bio in front of me again, like last week, so I apologize. So we'll just have him kind of jump in when he gets here. Hey, Max, how are you?
Great, guys. Great to have you on, or great to have. Thank you for having me on. Glad to be here.
Yeah, absolutely. So we usually just started out by having the guests talk a little bit about how they got into real estate to begin with, and then we just kind of pull on threads from there. So if you want to kind of rewind and just give us your story of how you got bit by the real estate bug, and we'd love to hear it.
Yeah, absolutely. So, I got into real estate right out of college, and and just dating myself. I'll be 43 here at the end of the summer, and I started out as a broker. I didn't know anything about real estate. And in fact, the reality was is that I didn't really, as a when I was in high school or even younger, in college, I didn't really have much exposure to the business world. Both of my parents were government employees, and they both kind of took the steady Eddie course. Hey, government jobs, they got paid, and that was kind of their way of going about it. But I didn't really get much education in business. And right out of college, I started working as a broker for a really fantastic shop in Central Coast, California, in Santa Barbara, company called Radius Group. I worked with a senior broker by the name of Steve Golis. Fantastic broker, one of the best relationship managers I've ever met in the business. He's truly endeared himself to the multifamily community and in that market, for really his entire career. And I was able to really ride on his coattails when I started out in the industry. And that was a really great way for me as someone in my early 20s, right out of school, to get a lot of deal experience really quickly. And you'll meet people in the industry. Hey, how long have you been in the industry? 20 years. Well, how many properties have you transacted on? And they go 20, which means they've sold one a year for 20 years, and they might have been in the business for 20 years, but, they haven't done a lot. I
Yeah.
was able to work with a guy who was doing, I want to say somewhere between 25, 30 transactions a year. And that was just fantastic for me. I was young, super green. I mean, like when I look back on what I thought I knew when I was getting into the business and, what I knew after that time, I mean, it was just, when you're young and so confident, you don't realize how much you don't know.
Right.
But I was able to just get a really great level of fast experience, really young. And in that particular mode of working, on that brokerage team, it was small deals. It was fourplexes up to probably about 30-unit properties. And if we were, working on these things, there's a lot of mom and pop owners. We'd request a T12 and rent roll, and they'd give us, a handwritten ledger, whatever the tenant paid last. It wasn't even, correlated with, what their rent roll actually had. It was just what, someone paid, and receipts for, doorknobs or something, and that was those was their expenses, and and it's funny because at that time I wanted to move into, an acquisition. So I want to do bigger deals. I want to do larger transactions. And I left the brokerage community and went into acquisitions in '06, which is right as the market was starting to decline. Well, '06 was a pretty hot year, and then it started declining after that. But it's funny because I went from mom and pop owners where I was kind of like tired of getting these like bad financials, to a market where we're working in acquisitions where we were trying to find owners who had bad financials, bad record keeping, because we knew that there was a value add that was there. But um, but I started working for a company called Fowler Property Acquisitions when I was in my mid 20s, and that organization really taught me how to be scrappy and really how the syndication model really worked. And even when I was a broker, I didn't really understand it. And Matt, I'm so sorry, I don't know enough about your background, so I'd love to learn more about it. But generally, there's a lot of brokers I talk to, and I'm still shocked when I talk to brokers who don't know what a cap rate is or don't know how to calculate an IRR. And a lot of guys who are wildly more successful than I've ever been, who are selling real estate and doing fantastic. And it just kind of shows both. Um, there's always another level of knowledge, and you don't have to know all of them. You're never going to know everything, but but once I got into that syndication space, I really realized how much more I didn't know even then. Kind of was talking about how much you think you know when you're getting into brokerage, and then how much you realize. Yeah, there's probably a point when I was in my mid to late 20s where I realized how much I didn't know. That was probably the big aha moment I had. It was like, oh my god, this industry is huge. And it's funny saying that because you meet these people who say there's so many different ways to make money in real estate, and they're right. I mean, the industry is just gigantic, and And I'll kind of come into the knowledge point here in a little bit to kind of why I'm bringing it up. But the Fowler Property Acquisitions was a fantastic, location to learn about how a very large organization that had several billion in holdings was, operated their very large syndication model. And and then later, my more recent W-2 career was leaving the company that's placed money for pension funds and equity advisors, or they were a fund manager for large sources of capital, and they had a couple of deep pockets of resources that they deployed to the market. And that shop, you know, it really taught me a lot more about what I'll describe as investments versus real estate, and that's kind of been a big shift in the market that I think we've all seen where, oh, do you work in real estate? Yeah, I work in real estate. But when it really comes down to it, we work in investments. We work with, investors who are placing money into the market and then learning how to really present numbers to investors, how to risk adjust returns, how to say why this investment is chosen and how we've underwritten and analyzed it. And and I guess when I'm talking about this knowledge base in regards to what at one point in time versus later in your career, you just find out it just never ends. And it's like, I've been in the business for 20 years, which is shocking to me to go, hey, I've been in the business this long. And then you find out that small nuances of running a business are now totally different than the actual functions of um, buying a piece of real estate, or there's the transaction process for real estate and the investment, and there's just all this other work that you have to do to operate the company. And that's why
Yeah.
one of our big hires that we want to make here might sound silly, but we can't wait to hire a controller, someone to work through some of these more day-to-day tasks that take up a lot of our time now. So within that background of, I'll call the W-2 jobs that were within the acquisition space and placing money within some large asset classes and also doing, brokerage work. I've been in the industry a while, and started my organization about a year and a half now. And, we're young, we're super green. And we have a lot of experience, but, we knew it was going to be bumpy. We knew we were going to have a period of time in, really 21 and 22 where we were really selective with deals, and in a great sense. We started the business when we knew the market was really, really hot, and we had to be really disciplined with not over purchasing. We really did. And it was hard. It was hard. There were a lot of deals we were looking at where guys were bidding on stuff and they were putting, seven figures hard day one. And we weren't, we were saying, hey, we got to make sure we stay diligent. And on a personal level of experience, I went through the last recession and I lost a ton of money during that last recession. And and those bruises you get, those black eyes you get from the industry, you always remember them. And for that reason, right now, our portfolio, we don't have any fires we're putting out in our backyard right now, which is a great thing. And there's a lot of other groups that I know who are relatively more recent, entrants to the market, who are kind of realizing that some of the bridge debt, some of that rent growth they were hoping was going to be there, some of that debt coming due. Maybe their bridge debt isn't as much of an issue, but they're realizing that it's just maybe the bridge debt cost isn't as big of an issue. It's just the fact that they can't get a refinance for the rate that they wanted. There's different issues that pop up in the market,
Yeah.
and so that's where we are right now. So so I gave you guys a lot of information. Well, what can I answer
Yeah.
for you guys on a more specific question, guys? Okay.
Yeah.
Um, Mark, I have well, okay, so Max, I've been in real estate for 16 years, and I'm on the sort of the JV side. I'm not in full scale syndications and raising millions of dollars. I do JV deals that are sort of around the $5 to $10 million range. But one thing you said was I relate to this. It's like when I was in my early 20s and I got my first year of experience in real estate. I thought I knew so much. I mean, that's just like you sort of like your young, ego. And maybe it's necessary. Maybe it's the thing that gives you courage and confidence to like go charging forward and then just get your ass handed to you.
Pretty
But
much.
only like probably about 10 years ago, and even now, do I like realize that I'm I'm just scratching the surface.
Yeah.
And it's definitely a freeing feeling as a business owner to just have that come to realization that like you just don't. There's so many things you don't know, and relying on on the who, not how, and relationships, and knowing that there's other people out there that have circles of competencies that are far greater than yours is the greatest source of leverage. Like we talk about bank financing all the time, but like those people with that are way farther up on the ladder from an expertise level as your greatest source of leverage and power in the industry.
Yeah, I think that the real realization that I had to come to was the fact that we were never going to know everything, but that we could figure out how to overcome any obstacle. And I think that was a really big one because just this idea that because I started this company a year and a half ago, but everyone in a W-2 job always has this, oh, well, when I start my company, it's kind of this kind of pushed kind of further when I get that one particular investor, or when I figure out how to do this one thing, right? There's some kind of moment that they have that says, oh, when this event occurs, then I'll start my own company. And we just kind of say, hey, that is just a forever never going to happen, kind of
Right.
commentary, mental mindset. And instead we just, my business partner and I just kind of agreed to the fact, said, hey, we're never going to know everything. That's the reality of it. It will never happen. Even the guys at the top, I don't care which guy you name at the top of their game, if they tell you they know everything, but they would never say that, because most guys at that level actually get it. They go, hey, you know
Yeah.
what? That's why I have people that I hire. They can figure these things out. But what they all do is they can figure out how to overcome, fix, bridge a problem, work through an issue, and make it to the next level. Because there is no business that's smooth sailing, none
Right.
ever. And even working for the W-2 companies, you find that out. You find out that there are these bumps in the road that you just didn't think were going to be there.
Yeah. What do your deals look like geographically and size, and what are you?
Sure. So we're still young. We did 5 transactions in 2022. We have 3 deals that we still own of those deals, and we're in California and Arizona right now, and we have just expanded into the Texas market. And in Texas, we're focused on the 35 corridor.
Okay.
And there's reasons that we would like to be in Texas, and why we're investing new money and resources into getting into that market. And I can go into some of those if you like, but we have a big belief in the red states, which is not a surprise. You hear that in the industry all the time. And there's a lot of reason for that, from regulatory concerns. And then we're also invested in Southern California. And as I say that, red states, Southern California is where I've just done the majority of my business. And for all of the concerns that people have about California, the the rental environment within the state is also what's really continued pushing the prices up and up and up and up and up, in regards to being a super high barrier to entry market. There are some factors that concern a lot of property owners. We have to deal with them constantly, but we also see why those factors in the market really make a lot of the real estate that we have transacted on more valuable, because the barriers to entry, even for new products to come to the market, is so cumbersome that it makes the existing supply worth more money. In
Right.
California, it's just such a low transaction market, and since the taxes are fixed within the state, a lot of guys buy in the state, they just don't sell. They realize they're getting a gain every year by not selling and just managing the asset well, and eventually cash flowing, very, very heavily. But you have to kind of build out to that. You have to plan for that. It's not a 1 year business model where you buy an asset and then cash flow, 10% the
Mhm.
following year. You kind of have to work into that.
Yeah. Let's say some similarities to New York for sure.
Oh yeah, absolutely. Yeah, absolutely. And I'm a very firm believer that you can find great deals in any market anywhere. You just have to know the market well enough to be able to identify them. And that's
Yeah.
the biggest key factor, I think. When someone says, "Oh, that market's a good market or it's a bad market," well, the reality is, if you're a good at doing your homework, you know the market well enough, you can look at all the deals and go, "That's the deal out of all the rest of them." And
Yeah.
um, and that can be done in any market, even if it's a New York, New York high rise, or something that's in downtown Miami, or something that's in some coastal market where the price per unit is 600 a door, but you found some property that's 525 a door. Those numbers might sound funny, but the reality is a lot of guys make money in very, very expensive markets, or markets that are people say, hey,
Right.
I don't understand it, or I can't figure it out.
Yeah. There's always a market, and you're either going to participate in it or you're not. And the people that know the market well, they participate because they understand it.
Yeah, and
I
they have
think
that
it's
confidence.
interesting. Yeah, I think it's interesting. The three of us all started as real estate brokers, before we kind of transitioned into the capital raising space. Do you think it's a good move for people that are getting into capital raising to maybe follow the same trajectory that we did?
It's just so funny. I know people who are brokers who make healthy 7 figures a year. Several. Not even like one or two. A lot. I knew one guy who triple escrowed. I mean, it's not even a commercial. I mean, it was a residential sale. It was three homes in Newport Beach, California. Each home was I think a $5 million transaction. So he double ended. Gosh, he might have taken four fees on that. He moved three individual homeowners out of their homes, and did two or three 1031 exchanges for these homes. Each one was an investment type property, but it had an owner that lived in it, so he was able to work through that. I think the guy made over 1.5 million on the single transaction of these three homes that went through. And
Wow.
a lot of people talk about, oh, commercial or investment real estate. And the reality is, residential versus commercial, they all make money. There's more supply in residential. There really
Right.
is.
Yeah.
It's not to say I don't love commercial where we do, but I look back and, when I was early in my career going, oh, I don't want to sell homes, like I wouldn't want to do that. I'll tell you, there are people who make fantastic sums of money in that business.
Yeah.
And same thing for commercial. And whether or not you start wherever you start in the industry, I think it just depends on where you want to end up. For me personally, being a broker was a little lone wolfy. And you'll hear about this, guys, they might work for a company and they don't really work with the other people in the office. They work in an office, they got other guys in other
Mhm.
cubicles, but no one's really sharing,
Yeah.
and you hear about offices where, they hit print on something on their computer and they run to the printer to not have, the other guys see what they're working on.
Yeah.
And I've never worked in a shop like that, but you hear about it. And I have worked in shops where, senior broker walks down the hall and, goes, "Oh, hey, you called, so and so. Yeah, yeah, I know him. So we're going to work on that deal together." Going, oh, 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 okay. That's just how it is. And and for brokerage, when I was younger, I looked at that and I was kind of like, gosh, this is really hard. But now I look at it the other way when I go, look, you got 20, 30 years of experience, and that's 20, 30 years of relationships and business that you built in. And a lot of guys who are senior brokers, they'll hire a junior, and the junior doesn't really see that. They don't know that there were 30 years of cold calls, 30 years of investing in the business, multiple years in there where there was a cycle turn and the broker wasn't making any money at all, but yet they stuck through it and they kept paying staff even though they maybe didn't have the money because transactions were low. The junior guys don't get that. The senior guys do because they've had to be in the business that long. But my point is that on the brokerage side, um, you still kind of had to work solo. And I liked working on a team. I liked having a team. I liked working on a team. I liked having guys that were within our direct cohort of business, to make things happen. And for our company now, I cannot wait to get more staff to build back to that level that we were at with some of the W-2s that I was at.
Yeah.
And that just goes to whatever someone's individual goal is, because I don't want to say that syndication is better than brokerage or brokerage is better than syndication, because they're totally different. They're just
Yep.
more ways to make money in the real estate industry. And neither one of them, I would say, really can. Well, I know there's a couple of brokers who I've known over the years who have made over 30 million a year. A couple more than more,
Wow.
um, and sometimes you don't know that they've made that much, on paper, or whatever deals you're looking at with them, that might not look like that much money. But yeah, there's several brokers over the years who have made huge sums. And then I know some guys who work in the syndication space who make 100 million a year, and you see it, and a couple of the guys I've worked for a couple of billionaires. I've worked for a couple of billionaires. I placed money for several billionaires, and those guys, another ignorant, kind of commentary, those guys worked to where they got to. And as a kid, you see Mr. Burns on The Simpsons, and he's this kind of old guy who's, worth a lot of money, but, he's kind of out to lunch. But, I'll tell you, the billionaires, they earned their spot. Every one of them, they earned their spot. They earned why they're there. They earned the authority. And eventually, it's at that point where, they only want to interact with guys who are worth their time,
Yeah.
rightfully so. And those guys, they all have different paths that they walk to get there, but all of them had a really great business acumen to help them to get there, and not help. I shouldn't say help them. That they created and built to get them to that level.
Yeah.
And and those, the people who I've known who've been at that level have been, I've been very fortunate to be able to see how they operate their teams, and how they push their teams, and how they fire from their teams, because they're making decisions based on metric based accomplishments, which is
Yeah.
something that when you're younger in your business, you don't have as much of an ability to do until you're doing that business, to use those metrics. So
Right.
those are goals that I'm, voicing to you guys, that, I'm looking forward to at our organization eventually.
Yeah.
So let's rewind the clock a little bit. Max, how did you cultivate the first relationship with your first limited partner?
There were people we knew in the industry, it starts out friends and family, it always does, so when you say, how did you cultivate it? I mean, there were people we knew.
Hmm.
And after and we've got a very, to be totally transparent, our number of LPs is very, very small right now. We're still young. We did some of our first syndications last year, and they were great, but market took a hit. We've been very, very cautious with what assets we're buying in the market right now. And we recognized very quickly on that first deal that our friends and family were going to run out of money. We couldn't just keep going back to them. And even when you say friends and family, I'll call them your first call. Because when I think about family that we have, or friends that you have, the investors are generally not a friends or family. They're just someone who you knew close enough from a direct phone call that you could pick up. Hey, them in the industry, they trust you. They know that you will do what you have committed to and what you say you will do for them.
Hmm.
And then, so to answer your question, Matt, on cultivating people outside that network, we've had a lot of people who've been reaching out to us for marketing, and and we have to make sure that we are available to answer the questions as quickly as we can, and be a resource to those groups. But I think when you say the cultivating them, and this is the skill that I'm working on constantly, but is being able to be found. There's a lot of guys who might want to work with many people in the market. There's 320 million people in the United States, and to be honest, probably need about 1,000 to run a great business. On a percentage basis, that's not really very many. So the job is actually going out to make sure you find those 1,000 people who say, hey, I like Matt, I like Mark, I like what they're doing. I'm trying to find, they're already out there, looking to invest money. They're trying to figure out how to do that, and they want to find someone who's got, the honesty and integrity, and maybe their business model you guys are working on they like, or whatever it is. But it's being out in the market to be able to have these people find you guys, so that they want to work with us. And that's what we're working through, quite constantly. And I wish I could say it was a faster process. We're looking for our next deal right now, so that we can market the crap out of it and have more people find what we're working on. So
Yeah.
that's what we're doing.
What ways do you typically market your offerings?
So for our offerings, we go through, and similar stuff that you see everywhere. We have email blasts. We've got guys we call directly. We still are working on both, finding LP investors that can write checks between, I'll call it 50,000 up to 200,000, and then also on high net worth investors who can, come in with several million per deal. And and the marketing really has to be for both. So the larger check writers, those are individual calls, those are individual presentations. We're working for those guys. On the smaller calls, it's a lot of social media campaigns and other work to help people find us that are in that category. And you need both. If you're doing a capital raise for 20 million, that's really hard with only $50,000 check writers. Not that I wouldn't love to have more investors. That's a lot of work. And some people kind of say, well, why is it so much more work? And it's like, when you're actually in the paperwork function, you're going through these docs and these legal docs and all these things, and you realize how cumbersome it actually can be to go through those systems and have it done well. So so we're cultivating both, and it's just ongoing process that should never end. There's never a point where we should be relaxing and going, okay, we have enough investors now. The reality is we just have to keep building that out.
Yeah. Yeah.
Yeah, no, Mark, I tell my students, it's like, they're like, when do I get to stop, raising capital? I was like, you never stop.
Yeah.
Because if you're looking to, if you're not growing, you're dying, right? So if you're not continually pushing the envelope, and by the time deals reach maturity, I mean, you can have exhausted your like current, I guess, like relationship pool of capital, so that has to keep expanding over time. Same thing with deal flow.
Yeah.
Yeah, absolutely. And Fowler Property Acquisitions, the patriarch of that company is a gentleman named Greg Fowler. He's really a savant in the market, and he's really an intelligent investor, shrewd businessman, someone who, I learned, just an absolute ton from. And he's also a guy who's, repeatedly started new companies within the real estate space. And when I worked for him, he had just a few organizations. He had a construction company, a property management company, and his acquisitions arm. And then he had that was really it. He had a couple of other side business projects, but those were his three real estate focuses. And since that was over 12 years ago now that I worked for him, but I've seen how many more businesses that are within the real estate space he has started and have been successful because he already knew how to grow a business. He already knew how to syndicate, and then he knew how to get the people who were the who, not how, to be able to run these individual businesses for him. And he already had some of these other machines already created that he could, re-implement within the business space. And, and I look forward to having that situation, eventually once we've worked through it, or not worked through it, but, done the work that we're doing now.
Very cool. Matt, you want to go?
I mean, sure, yeah. I don't want to monopolize your guest here, Mark. So
You're fine.
I feel like I'm talking too much. So, if you guys, I'd love to hear any of you guys. If you guys got advice on how to find more investors, I would love it. There's never a time I wouldn't love to hear it. Everything
Right.
we're doing, everyone's looking for the secret sauce.
Yeah, I mean, I think there's no secret sauce. There's no magic bullet. I mean, the best you can do is to systematize and make habit out of what growing your capital base.
Yeah,
So
I'm in complete agreement.
yeah, so I don't even have there's far more sophisticated capital raisers than I am that have a Podio and a HubSpot CRM and that sort of thing. I have an Excel spreadsheet with names, emails, and phone numbers. It's really it's that archaic, and I think that a lot of people want to overthink it and think that they need some type of product, and then when they get that product or that magic bullet, that all of a sudden the universe is going to give them permission to to do that next thing. There are things like after I've done things like the extremely inefficient way, I'm like, okay, this is ridiculous now. Like I need to invest in some type of system. Like so for me, we're not at the point yet where we're have 100, 200 investors in a deal. For at the most, we have we have bigger check writers. We're doing $5 to $10 million deals, so we're raising anywhere between like $5 to $2 million, and we're generally raising it from sometimes 1 to 5 people. So I don't need at this point in time to invest in a product like Groundbreaker, for instance, which is like an investor relations platform. But at some point in time, when I start doing like 100, $200 million deals, then at that point in time, it's like, okay, this Excel spreadsheet just really isn't cutting the mustard anymore. So I need a platform that's like Groundbreaker that has all the subscription documents and the PPMs, and the K1s get automatically pushed out through that platform, and based upon their pro rata, and you can calculate all types of preferred returns and waterfalls and all that crap in there. But I think that a lot of people just kind of get like hung up with, it's like, oh, I need a system. I was like, dude, you have like maybe 100 people in your contact list that are potential investment partners. Like you don't need to spend $1,500 a month for a subscription platform. Like you can burn through that list pretty quickly when you need when you have a deal that you really like, that you want to present as a way to participate with them.
Yeah.
There's no shortcut for the hard work. The reality is, there's always a reason. Oh, once we have this next system, then we'll be able to be successful. And the reality is you just got to do more deals and grow. Is you take the opportunities to grow when you can and implement the systems when you can that work. That's definitely something between my business partner and I that I push on a lot of the systems. We have to get this thing done so we can get this next level set up. And some of that's been, a lot of growing pains. And I think that's something that's we've just kind of accepted the fact that, the growth is uncomfortable and that's where you're improving. You hear a lot, I mean, you see a lot of these Instagram quotes, and I agree with a lot of that stuff. The reason that people build confidences is because they overcome something that was previously not thought doable. And then once you do it, then you have this confidence that that was, something that you could achieve and make happen. And that then grows towards you making the next decision to make that next growth step. And a lot of those different systems are things that we constantly are trying to work through. And I might be probably a little, I mean, I would like to say that I don't push on them, but man, I push on them constantly. I really do.
Yeah.
I'm always trying to push to see how we can get places faster.
Yeah. Yeah. The problem I have with CRMs are, they're only as good as the operators. And so if you're building a sales force and you've got some salespeople under you, and you make this great, amazing system, if they're not really utilizing it, then it's really, you're spending a lot of
Yep.
time building a system instead of actually doing something that's going to move the needle. So I'm kind of with Matt where, I sometimes need to take a step back and just go back to like a spreadsheet mentality where I've got, okay, these are the people that I know I'm working with now. I can do a deal. I can get some traction. I can get some momentum in my business instead of fussing around working on the sales side and the marketing side. Even though that is really, really important for the business, it's kind of something that you work along while you're still doing business, right? And you improve your systems as you go.
Yeah, it's super chicken and egg. And as
Mhm.
I've just accepted the fact that it's forever going to be, I mean, it's always going to be chicken and egg until you really have some of those next level, whatever that next monument is, or the next peak that you've climbed, it's going to
Right.
be like that. And, and some of the social media marketers that we've worked with, we just recognize that. They go, what do you have right now? And we go, well, not much. We're a company that's been around a year and a half. I mean, I've transacted on a ton of, I mean, I've, in my career, I've transacted on over 3,000 units. And with an acquisition space, about half a billion. As a broker, probably about 250 million.
Mhm.
But my company, we've got we've got 31 units. We are super young, and that's okay. And and the young side of our business right now is just something that we just recognize and go, hey, this is just how it has to start. There's just no shortcutting it. And a lot of guys. Within this is a side note to the chicken and egg, but you know, um, that whole being a beginner again is just something that if you want to start your own shop, you just got to kind of stomach and swallow it and go, hey, this is part of the gig, you know.
Right.
But in a great note, and on some other kind of facets of that, you know, um, been working from home for the past, since we started this company. My first son was born December 21, and I've been able to see his entire first year and a half of his life because I've been working from home during this entire time. And it's been hard, it has. I'm not gonna say it hasn't been hard. It hasn't been something where it's been a ton of late nights and all this stuff, and it has. Starting a new business is always hard, but being able to see, the first months and years of my son's life, from just being able to open the door, go out, make lunch or whatever it is, and come back in, and shut the door again, and then those brief little moments being able to see him, have been fantastic.
Yeah.
And some of those things are the reminders of why you start your own business and why you want to be able to be, really in control of your schedule and those things. Because right now, he's super young. I'm able to see him a little bit, but a couple of years from now or longer, and I want to take off to see a soccer game or whatever else. There's a lot of future things that are very in mind and in goal with being a business owner. The
Yeah.
stresses will never go away, but the
Right.
freedoms are also part of that. So
Yeah.
that's just a side note that I'm, very pleased with. It's one of those things I didn't realize I was going to love so much when I started this process. I didn't think it was going to be something that was going to be a bonus to it, but it has been.
Yeah, for sure. The deals that you took full cycle, since you started so recently, what did those look like? Were they more kind of like flip opportunities or?
Yeah, the only one that we took full cycle because we own the other ones was an opportunity to turn a, gosh, how many units was it? It was a 29 unit property in Phoenix, and we held it a month and then we sold it. And we saw the opportunity. We kind of threaded the needle a little bit because it was an opportunity when the market was just transitioning. The Fed was just starting to increase rates,
Yeah.
and with that asset, we were able to get out of it pretty quick, and take a check for a couple 100,000, which was great. But it was nerve wracking for sure. I don't want to say it wasn't. It really was. And had we ended up owning that deal, would have been fine. Would have been a fine asset.
Yeah.
It was a great location in Phoenix. Had great opportunity to to turn the asset into something really fantastic with where it was. And the guy we sold it to did. He's done fantastic with it, and I see the updates all the time. And I'm so glad to see that he's done so well with it. And and our short hold to it, was part of it in a way that we were able to smooth out it relatively quickly. But our other asset that we own in Phoenix, it's small. It was a 10-unit deal, and it was the first deal we bought. We bought it in January of 22, and the benefit with that asset is that the majority of tenants there are on some kind of subsidized housing, which was not a business model that I would have said I was really excitedly looking into when I got into the business. But what we found out within a market that has now some shrinking rents, more concessions, some other factors, we're super insulated. We haven't seen any of those factors. So we bought the deal at a 5.5 cap. It's probably performing about a 7.5 cap now. We've got super cheap debt on it. It's been a fantastic asset. And that was the first one we bought. And we still look at it and go, wow, this is a really great buy. And then our most recent deal that we did was we purchased a couple homes that were brand new construction out in Indio. And that was something that we also, I would say, wasn't our true focus of our buy box, but when we saw the opportunity, we just said this is a really killer opportunity. In that we bought them for the brand new homes, and we bought 4 of them for probably about 55% of their market value.
Wow.
And it was a basis play. We knew we did it. We're like, hey, these aren't going to be big cash flowers, but we bought them with a really huge amount of equity built into the deals. And they've been fantastic for us. That was our last deal that we did. And when we looked at them, I was really quick to kind of be like, hey, look, this is not our box. We don't want to do this. My advice to any listeners is to stay in your box. Identify what you're buying. I mean, I'm telling you the story because I'm on the podcast and I like being honest about all the deals. My advice is to stay within your buy box so that you are an expert of that. But my business partner pushed me on this one, and he was like, hey, look at this, look at these numbers, check these things out. This is where we're buying. This is where the basis play is. And I really looked at it and went, wow, this actually really is a good opportunity. So on that one, we didn't bring any investors in. And we didn't bring any investors in primarily because of that stay in your identified investment parameters for what your offering is to your investors and the value you're giving to them.
Yeah.
So and then we have another asset that we syndicated in Riverside, California. That one's super close to UCR, and that one's doing great. It's funny. We did a big pool remodel, and we just talked to our property manager this morning, and he goes, "The residents love it. They've been out at the pool all weekend. They're super glad that you redid this whole area." And that was really nice to hear. Because within real estate, there always is a sense of completion, which is one thing I love about the industry. I love that when you're doing a value add project, you're able to take something that's often in really bad disrepair and make it something really nice. And we did that at this property. And it was located in a good pocket of Riverside. And Riverside is this market that's really struggling for housing, to be honest. The income levels are don't quite support a lot of new development. New development, you got to be at north of $350 per square foot in rents, and that's hard for a lot of people in that market to pay. And as a result, there's not a lot of new supply coming to the market, but they need it. And so the existing product that we have. You were able to do a good value add and provide a really great product to the people and that are our residents that live there, which is really great. And our property manager, was like, yeah, it was great. Everyone's at the pool this weekend. They had a really good time for 4th of July, and that just made us feel, great. We love hearing that. So that was a good thing to hear.
Yeah.
So Max, what else can you tell us in terms of parameters of what is in your buy box? Or if you were to use your mind's eye and like visualize like what that is in terms of a property.
Sure. So our buy box is I'm going to call it transitioning with the size of our business. Right now, again, we're young, so we would do deals right now that we that are really between about, I'll call it 2 million up to about 10 million. That we would we've got 2 buy boxes. We've got one buy box that's our small portfolio. Where it's probably assets that are between, I'll call it $1 million up to about $5 million. And those are deals that we would do all cash with, I'll call it a very niche body of investors that we already work with who are like, hey, we like this and we can do this right now. And then our other buy boxes are assets that are larger. I'll say between 10 and probably about 25 million. And for that body, that's where we're going to go out to our larger JV partners and say, hey, this is a really great asset in the market that we're looking at. Right now, this year, we've been spending a ton of time on our systems, a ton. And, we've been offering on deals, but to be honest, we're not pushing on anything. Like this is our price. This is our price. We think this is worth this. And there have been a lot of brokers who have said, "Oh, you're way off on the seller's price." And they go, "Well, how many other offers have you gotten?" They go, "Well, none." I go, "Okay, and do you think the market's going to get better?" And they go, "Well, the seller's not interested." And I go, "Well, you're not telling me whether or not, whether or not the market's going to go down." And I get this conversation a lot with a lot of these brokers who, there's some brokers who are relatively realistic and they go, "Hey, let me submit it and I'll talk to the seller about it." And there's other brokers who seem like they've got a couple listings that they just don't want to. Maybe they don't want to let them go. If they let them go, they don't let it into market. I got in a conversation with one broker on a deal in Phoenix, and he was like, "Well, your offer is." How did the conversation go? He pretty much said, "You're way off from the seller's price." And I was through the conversation, I was able to get him. I pretty much was like, "Okay, so you think the market's going up or down?" He was like, "Well, probably down because we're going to see more rate hike increases." And I was like, "Probably." So do you think so? You haven't received any of their offers? He's like, "No." And you think that this asset's going to be worth more after the rate hike goes up, and that's when they kind of go, "Oh well, they're not a seller at this price." And I go, "Well,
Yeah.
why are you listing it? If you don't think you're going to be able to sell the building, what's your goal?"
Yeah.
And those conversations in the market are super widespread.
Yeah.
There's a gap right now between the what the buyers can pay. Not saying there's not many buyers who have a ton of money just sitting in a briefcase next to them and they choose which asset they want to purchase. They're very, very hampered by market returns for investors and what we can get financing for. I mean, and we're all super constrained by these things. And the seller goes, "Well, my number's X, and you guys are 15% below, 20% below, and I'm not selling unless I get my number." And until there's more pain, they might not come down. And that's the big difference is for us. We're really looking for sellers who are market sellers. Like we're not looking for the guy who's, "Hey, if I get my number, I'll sell." That's
Right.
great, and I think as an owner, you have every right to not sell your building. But that's not who we're looking for right now. We're
Yeah.
looking for the guys who actually are when the market prices it, offers come in, and hey, this
They're
is
going to
this is
sell.
a good offer from a company that understands that they're going to sell.
Yeah.
And we're looking for that seller. And it's been hard this year. It has, even for the small assets. We thought we were going to have a better opportunity to purchase smaller deals, at a discount. And there've been some that we've seen. There've been some lenders we've been working with on trying to, buy some assets they're not performing for their books. And those are processes that we're still going through. But we just know we have to be patient. And I guess I'll talk about this a little bit. You know, there really is a, a market, I don't call it a market identity or a market, philosophy. But these recessions or these end of a cycle and beginning of the next cycle, they're almost planned. And not a direct plan. It's not like guys get together in a meeting room, but there's definitely a we're not buying anymore and we're not going to buy for this period of time.
Yeah.
And when that happens, it takes a while. In
Yeah.
the last recession, '07 the market was going down, '08 market was going down, '09 market was going down. 2010 market was like near to a stop. 2011 things were not good. You had properties that were selling for three caps of all things. And the reason they were was because the NOI was down 30% and there were no deals that were available at that market seller pricing. So when one deal did come up, and like I said, I'm a market seller, it was selling for these ridiculously low cap rates even during those years. But there was no volume. So the few deals that came out, had really aggressive offers coming out to attack them. But the reality is, it was '07 to 2012 for really things to really get started, to really start picking up momentum again. And right
Yeah.
now, I mean, with the banking crisis that's it's still really unfolding, the Fed expecting to raise rates again at their next meeting. I mean, we could really be in this for another 12 to 18 months.
Oh, for
And
sure.
in most conversations, and I don't want to say my crystal ball is better than anyone else's, but generally my conversation is 25. Is when we're going to start seeing a big increase in the direction. And no one hold me to that. I do not have any knowledge that anyone else. I don't have any access to knowledge that other people don't have that are watching this. But the knowledge I do have is just in experience that these things take a long time. They take a long time. It takes a long time for properties to go back to banks. It takes a long time for ownership groups to figure out what they're going to do. Groups to do capital calls. And and those processes just take a long time. So we're trying to be patient. We're trying to be really diligent with our time. We're trying to do a lot of those system building things so that we're prepared for that next wave. And
Yeah.
we're rowing, we're paddling for it right now.
Yeah, I think things take even longer than they did before. If 2 years was what would have been in a normal market, post COVID, I just feel like things are so backed up and so political, and there's so much red tape that it could be longer.
Yeah, and we just don't know. Some of the deals they're working on right now, and I've had a couple investors who have said to me, we really want to see a 3-year hold. Yeah, that'd be great for us to get our money in and out. And,
Mm.
and that sounds nice, but, bridge money right now is at, 8.5 to 9.25. Most
Yeah,
guys are not putting bridge money on their assets unless they're going to stabilize at a cap rate that's north of that bridge amount.
right.
And on agency debt, you're talking about being in a deal for, probably about 5 years on a minimum,
Yeah,
which makes it pretty hard to be able to find some of those, shorter flip opportunities, especially when you have a bunch of investors who got really spoiled during 21 to 22, where they did a 2x equity multiple for a 6-month hold. I mean, that is not traditional. That's not traditional in the market.
no,
And, and we saw that during those years, but that's not something that is normally is historically that's not the case. To have those quick holds and have such great returns.
right. Yep. Everybody's been spoiled, and now it's going to be
I
tough.
know. Yeah, that's where the opportunity is.
I mean, I think that I think we have a good experience in starting before the Great Recession, because people that are that are younger than I am, for instance, just even a few years younger than I am, they graduated college. I graduated college in 2006, and got into real estate, which is it was like I got right in at the peak. But kids that are a couple years younger than I am, when they came into the workforce, everything was going up and has gone up,
Mhm.
up until now. So I think that there's like this very, very, I'm interested to kind of see how it plays out between like the two type of investor psychographics, where people like us that have seen downturns. And I remember when Lehman Brothers fell. I remember I had friends that worked at Bear Stearns and were basically like going through the mass, how scary the mass layoffs were. I had friends working at Morgan Stanley, and working in the real estate field too, kind of seeing how things went through that cycle. There's a lot of people that haven't seen that, and it's like everybody looks like a genius in an up market.
Rising market. Yeah,
Yeah, yeah.
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 And go ahead, Mark.
I was just gonna say, it seems like the Fed is committed to like having a little bit of pain, and I think all those people that were doing the FOMO and the YOLO and buy the dip, like they're gonna need to get their hands burnt on the stove, probably more than once before they stop with that behavior. I mean, that behavior is just so entrenched in that generation. Uh, they're gonna keep doing it.
Look at
Yeah.
how old we sound, man. The younger generation, dude. But I mean, I think that the Fed. I mean, what is it? It's kind of like a triple headed thing here, right? So you got interest rates and floating debts, and this could be run the spectrum from not just commercial real estate deals, but auto loans, student debt, credit cards, all this stuff. And then you have the Federal Reserve's monetary policy, which is basically sucking liquidity out of the marketplace, because I have to do it myself. I mean, there was a few years ago I was able to offer my investors a 7% fixed rate of return, just like on real estate deals with no equity. And that 7% is not competitive in an environment where they can get a risk-free rate of return at 5% in a money market account that's insured by the FDIC. And then thirdly, then you have the actual debt that's actually on the actual assets themselves. And it's weird, this weird dynamic that we have the federal government and Powell like kind of going head to head with each other, where the feds are trying, the federal government's trying to pump more cash into the system through spending, and then you have the Federal Reserve trying to pull back on the brakes, and kind of how that the machinations of that is all going to play out in the next few years.
Yeah, it is. And I'm a big believer in physical assets. Things are tangible. And and within a lot of those different things you're mentioning, you commented on the risk adjusted return, and that's really what we try to focus on for our investors within a long term hold. And you're invested in the market for a long term period of time. A lot of people, they kind of sail through the downturns because they didn't have debt coming due, or they didn't have some other problem, or there was because a lot of times, oh well, my house has dropped this much in value. Last recession, you heard that a lot. Oh well, I've lost this much in equity. And reality is that only mattered if you wanted to sell.
Right.
If you didn't want to sell, that kind of didn't really come into play, or you needed to sell or something had happened. um but we still believe in the long-term trend line, so always we focus on. And within that long-term trend line, that's the Fed, I think during the last recession, I think they spent I'll have to don't quote me on these exact numbers, but I think it was like 1.4 trillion between 2008 and 2012 to get us out of the last recession. And I think they spent like 1.7 trillion within the first 6 months of 22, just for 6 months. So they spent 1.4 in over a 4-year period, and then they spent like 1.6 within a 6-month period. And the reality is a lot of that money eventually does get recycled back into physical assets. It will come back to, I mean, all this talk about hedging inflation, hedge keyword, they can't stop it. They printed more money. They printed more money. There's more demand, there's supply. Or in the case of money, more supply than there are investment opportunities to put it into. And that's what will occur within time, and that will further the increase in value for most real estate assets. But again,
Right.
we got to get there. So you're talking maybe a 2-year period until 25. But a lot of these, I read a lot of this stuff, but they're going to hedge inflation, they're going to stop inflation. There's no stopping it. There's no stopping
Right.
inflation. They printed this much money. It is now that much more money in supply. The question is how long is it going to take to have the consumer markets really get hit, and have those consumer markets really have a reshifting of staffing to have higher pay wages and those things that you would expect to see. But we'll Matt, to your point, we'll find out. We'll see how it all washes out here in a couple of years.
Yeah. Yeah, that's crazy to think about.
I know.
Yeah,
It's crazy to think about.
Oh, do you remember back in the day, guys? QE1 and like QE2, and then and then it was just
Yeah.
became QE infinity. And
Infinity.
I mean, many people don't like talk about this, but Federal Reserve was buying, was adding to their balance sheet and buying assets that they never bought before. Not just treasuries, but they were buying mortgage-backed securities to add liquidity into the market. So, yeah, we've seen some pretty amazing stuff. So.
Yeah, you look at any of those charts and you know that we're in big trouble. But that's why we're bullish on real estate, right?
Yeah, actually, I mean, Mark, you're right. I mean, that is the reason we're bullish on real estate. It's a tangible asset. It's tangible. And we just want to make sure that in this time of the market, when I was talking about the bridge rates, we always want to make sure our cap rate is north of our debt rate.
Yeah.
Our stabilized cap rate. And on the bridge money, I mean, it's just so expensive. It just is. So we stay away from it for right now.
Yeah, I think brokers still think they can sell some of this stuff at these elevated prices, and we just got to wait them out. That's I'm doing the same thing you are.
Well, they have that knowledge that maybe there'll be an exchange buyer.
Yeah, exactly.
That's kind of.
Yeah, somebody's got to put their money to work, or they're going to get hit with the taxes. That's true.
So
Max,
Max,
I was kind of making a joke. That's the comment I hear just all the time. Is they go, "Oh well, we're looking for someone who's in an exchange." And I go, "What makes you think your real estate's going to be what they think?" It's
right.
But I'm sorry, Matt, I interrupted you.
Oh yeah, so Max, I know you have a background in brokerage. I mean, we're all three of our backgrounds are in brokerage. So do you have any LPs that are actual brokers, either in the residential or commercial side of things, or do you know of many commercial real estate brokers that actually do invest in real estate or hard assets?
Back up like 10 seconds for me. My earpiece came out and I lost audio for a second.
Oh yeah. So I was just asking you in terms of like, brokers that invest in real estate, or they may have invested as an LP in your deals. Like, do you have many of those?
We do. Yeah, we do have brokers who invested. And, and brokers, there's just such a wide range of knowledge and skill from brokers. Brokers can be often a great source of investors because maybe they don't get as into the weeds on an IRR. A lot of brokers, especially if they do a lot of deals in the market, they might know, hey, the price per unit I see in this particular area is this number already, and this deal that these guys have in contract is 20%, 25% below that average. So they might think of things in a different way. It might not be an IRR calculation. And a lot of those guys, they might want a buffer to be able to place money in the market, because a lot of brokers, they can't, it becomes hard for them to buy a deal within a market that maybe they're supposed to be a broker in. They like the market, they want to be invested in the market, but someone comes to them and says, hey, I want you to sell my building. And if they buy it at some off-market price, that could be looked at as a little funny. Maybe the brokerage house might not like that, but maybe and that's even to say that they were getting a discount. It might be that they, hey, this is what our BOV would be, and we'll give you the same number, and here's the other information you can look at it from. I mean, there's still some, I'll call it perceived conflicts of interest.
Yeah.
So a lot of brokers, like the fact that they can get into the market without actually having to, be the guy who's the one who's, somehow segueing a sales process.
Yeah.
And some of those brokers, they all got into the business to be in real estate. For me personally, when I was a W-2 buying deals for my last organization, I didn't have time to buy my own assets. I mean, and that was part of the reason why I said I don't want to go back to the corporate world. It was I was working 80 hours a week, and and buying my own assets on the side. Most likely, my company wouldn't have really liked it. And I don't really know the answer to this. First off, I didn't have time. I didn't have time to be going out to other locations where my company wasn't operating to be able to find those. And on top of that, if I was buying other deals, no matter how you cut it, oh, you're having time to do this other business over here. Why aren't you doing more business for us? Which is the mindset of any sales manager. Just saying, I don't fault them for this. I'm saying this would be a real question. But it was something that stopped myself, as well as many other people who were in those W-2 jobs, from being able to start their own portfolio. And I said, that was something I didn't want to be a part of anymore. So that was the reason that we said, hey, it's time to start a company. It's never easy. We're gonna have to make it happen. So brokers are also, not excluded from that. They are just as in as everyone else.
Yeah. We are coming up on the 3:00 hour. So I don't know. Do you have any other words of wisdom you want to give anybody, or if you want to shout out, how people get a hold of you?
So you can get in contact with me from our website, geometricre.com, or my Instagram _Max Gonzales _. And email's great also, mgonzales@geometricre.com. We are looking for a couple of staff positions. We're looking for someone who's a dedicated capital raiser. We are looking for someone who's a dedicated acquisitions officer, primarily for the Texas market. And we're looking for a controller. And and for guys that work with us, we definitely plan on having them have equity in the deals that we're doing. So
cool.
so those are needs that we've got. And I love talking with guys. Guys call me from all over the country, and hey, I got this deal. You want to talk about it? You can reach out to me, and we try to be very open to those opportunities.
Perfect. That's very cool. Any last words of wisdom for the audience, other than staying in your buy box?
I've said this on several other podcasts, but don't look back. Everything that you're doing is building for working forward. Everything. The investments you've got in your career, the investment you've got in your systems, the investment you've got in your staff, all that stuff is, for future accomplishments. A lot of us can look back too much. Oh, that thing or whatever it was. And the reality is, don't look back. It's always forward. And, and that's just something that's, I try to keep in mind all the time, because, sometimes within starting a business, you don't see the fruit right away. The reality is you're not supposed to. You're supposed to see it over the course of a long period of time. But that's where all of the profit is. And, you have to have that view that you're rowing out to sea, and maybe you don't see that next island, but it's there. and you just have to keep rowing, knowing that it's going to be there. You just don't look back. You just can't. There's no point in looking back. So
Right.
that's the only other piece I got. So
Nice. You have any final words, Matt?
No, did a double-ended thing there. I had my podcast right before this one, so
Okay.
I'm a little bit tapped mentally, so I'm not as sharp as usual, Mark. Sorry.
Oh man, we're building up your endurance here. Well, thanks everybody for sticking around for the episode. We're gonna go back into the green room, and we will see you guys next Thursday at 2:00.
Mark, Matt, thank you guys so much. Really appreciate you both.
Yeah, thanks, Max.
Thanks.